Hello everyone, Moon Trades here. Today I wanted to talk about determining daily bias on a larger time frame to combine it with the last lesson on daily bias on a smaller time frame. Before we get into the video, like, subscribe, leave a comment, tell me if you learned anything, and join the free Discord. Link is down in the description. Now, how do I determine my point of interest where I look for reversals on larger time frames and how I determine my daily bias on larger time frames? What is my first thing that I look for? First of all, I want to look for a sweep of liquidity. What is liquidity? Resting, buy, or selling orders. So liquidity is just a lot of orders, right? This is a huge pivot point. We hit there, we reversed. Now we hit there, we wicked above, and that is why I'm bearish on the market. Also, we have bad news on the market, etc., etc. Um, so I might go down to a lower time frame. Look at that. We swept this ironically on FOMC, and then look at that retracement, and then once we hit it again, we're gone. We're down. Now, on a larger on a larger basis, I am bearish, but there are days occasionally. This is why it's so powerful to combine them both. Because some people just go like, since we hit this on the daily chart, then we're going down. That's not true. There are days when we will rally up, and there's a way to determine it too, which is just amazing, right? So I will drop down to my 60-minute with that in mind that on the longer term, once we start breaking these levels, I want to look for shorts. But I drop down to a 60, I start charting out demand. Demand, right? This is where buyers were found and price reversed. Buyers and sellers agreed on price. It consolidated and then it lifted off. I don't like it to see it in the middle of the range. Like I could have potentially taken this demand, but I just don't like that. I like seeing it at the extremes of a range. So here's supply. This is where we've been rejecting multiple times, right? So I'm bearish on a longer time frame. What do I see? I see it start to rally into supply. I see a small break of structure. Um, it go down. It rallies back up into supply, and there we're gone. That was my trade for today. Actually, if I go on the 5 minute, that was my trade. Right, we saw that accumulation lower. Right, we saw this accumulation. We saw this run. Oops, my fault. We saw this run into this area. We saw this little break here, kind of take out these stops into supply. That's extremely important. So this is where all these sellers are, and we just spiked, inducing people to go long. We have these stops cleared out, and then we retest that same area. That is a setup that I find to be very effective for me personally. There tends to be a break, that manipulation, obviously. We usually tend to come back to that original price point. That's usually what seems to happen. So this would have been your trade actually right here. And you could have had what? So you would have had this manipulation right here, like around this area. You drag it across, and there you go. That's your trade for, let's say you take it here. That is a potential 177 point trade. There you go. Right there. So you want to look for specifically a higher time frame supply, higher time frame demand, a sweep into the area, inducing people to go long, and then finally the retest of that original support or resistance, that liquidity that was holding all these stops finally comes back to retest, and there you go. That's your trade. So overall, I'm bearish. So this accumulation just means to me that's where price wants to come back down. This is all accumulation. Now on this day, I took it long. You know why? Because we just had come off this high. We rallied down, and as I explained in the last, as I explained in the last video, there are ways to determine short-term bias, and this is my short-term bias was long here because we built up all this liquidity, coming down, manipulating price, and finally rallying out off of this, interestingly enough, demand area. So we did it twice. 2 days where you could have had, wow, like literally 2 days where you could have had, here you go. Here's a hundred and, let's check this out, 100 and 200-point move, potentially. If you were to hold all the way until supply, 200-point move, you could have caught right there. So you have the same setup. We built up liquidity. Demand was here where price was pushed higher. We came back. We wicked below into demand. Rapid reversal. We were bullish on the day because of this setup. Because of this, we went up and then tanked, and that was a manipulation. Now we were up the next day. We trended up pre session. We made liquidity. We rallied into supply. We came back to this area and we tanked. It's a very interesting, isn't it? Very interesting. And now we're consolidating, and we're about to see what price does next. So, in conclusion, what do we have? We have a liquidity sweep. We can have supply and demand form in a range, and we look for that little bit of manipulation into that. And we also use our daily bias on a lower time frame, which I explained in the last video. So bring it together, right? Use everything that you have together. It's literally it's the system that like it meshes together very well, right? You have this, you're already bias bullish. You have this bullish point of interest right here. We come into it and then we reverse. Right here, we have supply. We're bearish overall. So this is obviously a very interesting trade for us. You can take it and bam, right into the liquidity price target. So obviously you'll have some days that will go against your overall bias long term. And that's what's perfect about using my last setup, which is that short term bias. So it comes together beautifully. So you can use this long term idea to kind of understand where the markets are going or are likely to go. But on a short term, if you just want to make profit for that day, just use my short term bias setup. And then eventually you'll expect the markets to trend lower because of your longer term bias and you're using supply and demand zones. And that works really well for capturing good trades in the direction you want. That's the longer term, that's the larger time frame kind of bias in a way. That's what I would use. So it works together. Use it together. Read price action. Like use this together. Learn how to just be able to spot these kind of setups because this will dramatically change your trading. So, I think that's it for today. Thank you for watching. Please like and subscribe, join the free Discord, and I'll see you in the next one.